What's up, Grid? Hey, today I've got Omni, the investor guy, on Grid, and I'm pumped to have you, man. You and I grabbed lunch maybe 3.5 years ago. We met through a mutual friend, and she's like, Rob, you have to meet this guy. You've got to meet this guy. And literally, we grabbed lunch, and I felt like I was with a kindred spirit, but we haven't. Then the pandemic hit, and then it was all bets
Sure.
are off, right?
Yeah, it's been a while, and exactly that. People told me the exact same thing. Rob, you got to meet Rob, right? So absolutely love connecting with you back then, but glad we can reconnect.
Yeah, man, and it feels like we keep tabs on each other through social, and so that's why I wanted to bring you on here, right? I see everything that you're doing in the community. I see how you're pouring into the agent and the investor community, and I thought I'd love to hear your story. I really don't know your story, right? And I know you're from Hawaii, right?
Yep.
And so why don't we start there? Why don't we go back in time and I want to learn about your origin story.
Yeah, absolutely. And as you mentioned, I'm from Hawaii. I've been in real estate for about 20 years now, as an investor initially, and then got in as a real estate agent and broker. Started in Hawaii, grew up in a very entrepreneurial family. My dad owned businesses, construction company, waterproofing company. My mom, several successful at-home businesses. So I kind of had that mindset from the beginning. Wanted to be an entrepreneur. Had several businesses myself before real estate. E- Everything from vending machines to ATMs to right to a store retail, starting up a brand at the mall. And so I wasn't sure what I wanted to be when I grew up. I still don't know what I want to be when I grow up, but I'm still trying to figure it out. And I stumbled across the book that most people on your show has probably stumbled across, right? Rich Dad Poor Dad, and that kind of took me down a path of a different mindset, of validating my mindset, maybe of why I felt I was weird. And then it also pointed me in the direction of real estate. I was actually at the time a surfboard salesman at a surf shop in Hawaii, and I was
Oh
flipping
wow.
surfboards, right? So um so I sold
Yes.
surfboards, and part of what we got to do was we got to clean off these surfboards. We got to, like, as it was easier for us when people brought surfboards on consignment, to like repair them and patch them while we were just killing time. And I'm thinking, man, if I brought in a beat up surfboard, like myself or people will be repairing this for free. So I would buy beat up surfboards and I sell them. So I'm flipping surfboards at this surf shop and selling surfboards as well, and got to connect with a lot of cool people that lived in Hawaii and people that were visiting Hawaii. A lot of people kind of funneled through there, and found some of my first mentors over a surfboard,
Mhm.
and connected, in real estate, and eventually got into real estate, flipping real estate, and then quickly realized that I wanted the passive income, and started to invest in Hawaii, and eventually realized Hawaii was too expensive for me to do much more. And I figured out a way to start investing remotely from Hawaii here
Mhm.
to what we call the mainland in various states, and been doing that ever since.
Now let's go back a little bit. When did you read that book? How old were you when you essentially started thinking about these things?
Yeah, I was early, like 20 or early 20s, probably, somewhere in that realm. And it was
Okay.
more of a validation of that mindset, and
Mhm.
there was a connection. Robert Kiyosaki's from Hawaii, so there's
Mhm.
like, yeah, I should just read that, and that took off from there.
Got it. Okay, so you read the book. It took you on this journey, this path. You probably, I assume maybe I don't know, did you go to some networking events? I mean, how did you learn the game? Like, because the Rich Dad Poor Dad doesn't teach the game. What it does is it kind of lays out the playing field of how to think, right? It's a thinking book,
Sure.
but it doesn't tell you how to actually do it. It leaves you hungry, right? I think that's what that book does, is that it leaves you hungry to be like, how do I play this game? So I'm curious, who were some of your first mentors, or how did you learn the game?
Sure. So you're exactly right, and thinking about how we did it back then, because right now there's so many amazing options, right? There's this podcast, there's so many great podcasts and websites out there just giving away really good information. It was hard to find back then. And so I think what it did for me more than anything is it started a conversation in my head, maybe even in my soul, that I just wanted to continue to have. And I had the conversation with as many people as possible, quickly found out who was not interested in that conversation. And so I think it
Mm,
just kind of put in my head that, and maybe is right now, I guess I have been reading a book on the reticular activating system, right? You
mhm.
think about it, you
Raz.
think about
Mhm,
something, your brain filters your reality to show that to you, right? And so that was probably what my filter was. And it felt like everyone was talking about real estate, everyone was talking about investing, and it forced me to have these conversations, over selling surfboards. That just led me to find my first mentor. And I kind of, he wasn't looking to coach anyone. I just said, like, what do you do? We're talking about this very expensive surfboard he's about to buy. And it turns out he was a real estate investor. And I just said, I want to come out and help you. Like, I didn't say,
mm.
do you want to be my mentor? I just said, what are you doing? I'm going to show up. My dad owned a construction company, owned a roofing company. That was been my summer job. I can put in the work. And I showed up and as free labor for him, on his first few projects that we connected on. And he eventually, found value in that and helped me along the way as I started my journey as well.
By the way, golden nugget right there for anybody listening. Right? If you just stop asking for things and say, how can I serve you? Right? Because the exchange of information was invaluable, right? Like that exchange of information. I mean, I remember my first job working for an entrepreneur. I worked for him for free. I was like, I just want to learn. He owned 5 businesses. I was like, well, how do you do that? I just want to learn. And I went to go work for him over the summer for free. Very
Yeah,
cool.
and the other point that you just mentioned, so how can I serve you? And that's tough because I know you get asked this all the time, and I get asked this. People come up like, "Hey, what can I do to help you?" Because they want you to mentor and help them. And when someone asks me that, it's tough. Like for me to think about what do I actually need from you? So it's less about people asking and just trying to figure out like them just showing up and just being involved and seeing. And so I didn't ask them, how can I help you? I just said, what are you working on? And tell me, and I'm going to show up there. So sure, luck he agreed to it because I would probably be on a different path if I didn't go down that route with him that
I
day.
love that distinction. Yeah, powerful distinction, right? It's like you seek opportunity to be able to serve, right? As
Yeah.
opposed to ask. Okay, so your first couple were watching somebody else do it, and then I'm curious. Do you remember your first one? What was your
I I
first one
do.
like?
It was Waikiki in Honolulu, Waikiki, and all condos out there. And I started out with a lot of condos so right now Airbnb is really popular. Short-term rentals is all the rage. In Hawaii and in Waikiki, there's a condo distinction called condo tels, which is if you go there, a lot of people don't know this. You go to a hotel, it actually might be that unit you're staying in might actually be individually owned, just managed by the front desk hotel. And so that was an
Mhm.
option for a very long time. It came with its own set of challenges, financing challenges, which led to offloading challenges for sellers. So it was a big opportunity to get into that and get into the short-term rental market. So I started with a condo hotel property and bought it and fixed it up, and we sold it, and then we eventually got into holding those longer term.
Okay, so let's fast forward now a little bit, right? You live here in Northern Virginia, right? You're married. You've got beautiful children. And I see from watching that you get your children involved in your development business. And so kind of walk me through a little bit about what your investment hypothesis looks like. Because over the last 20 years, you probably refined it, right? You did things, you learned things. I don't want to do that. I do want to do this. So this is the path, right? There's this calibration period that I think happens with everybody. What does your life look like today? What does your portfolio look like? What does your life look like? What's your investment hypothesis?
It's a great question. You started with my kids, right? I have 3 kids. My
Mhm,
oldest is 13, my daughter's 9, and my youngest is 7. And it's funny how family changes your focus, right?
mhm.
And investment. Why I like investments is it's not supposed to be emotional. It's about the numbers. Do the numbers work? And it's so easy. I can invest in this state or that state, and if I got the right team and the numbers work, I can make it work. And so starting out, I didn't do a lot of investing in this area. I moved here because my wife's family is from here, and I knew that real estate I can make work remotely and make work anywhere. It wasn't until my kids were old enough where I felt like I needed to be imparting like this knowledge that they weren't getting. And we start to do like the book. I start to run P&Ls with them. We play the game Cash Flow, the Cash Flow board game from Robert Kiyosaki with them, but they didn't have like tangible things to go touch and learn. And that's when I really start to focus investing more in this area specifically. And so every single weekend we're trying to buy properties, and it's usually my daughter that's fighting to go out on the road with me. And my sons like it, but she is definitely the most passionate. I call her the mini CEO. She'd fire me today if she could and take over. She'll take over the world. She's ready to just absolutely do that. But we keep them involved, so we get to use life lessons and work ethic and things like that, so that they can kind of I make sure that I'm giving all the education that one. I have amazing parents, but we just didn't talk about this growing up, and it's just not something that was part of my culture, part of our family dialogue. And I just wish that or want to make sure that I'm not leaving that conversation out on the table for my kids if that's something that they wanted to do.
Okay. So yeah, I asked you I fired off like 4 questions all at the
Oh
same
yes.
time. So those were the kids, right?
Yeah.
And then what is your, business look like today? Because I know you're a broker and you also have a portfolio, and I see you hunting for properties with your kids every weekend, right? So let's talk a little bit about that.
The vast majority of what I do is buy and hold cash flow.
Mhm.
Long-term rentals is still my bread and butter. We do short-term rental. We do co-living. We do some development as well. Last year was our biggest year by far. We usually get anywhere between 5 and 15 properties a year, depending on what it is. And we've been doing that for a while. Last year I set a goal of I just want to do one property a week. So I set a goal. I told the world I'm going to buy one property a week, 52 properties in 52 weeks, and had no idea how I was going to get there. But I'm once again a big believer on setting big goals and just telling people about it, and that puts pressure on you to figure out a way to do it. We didn't get 52. We ended up purchasing 46 properties by the end of last year. We had something that closed that got delayed in closing, so it closed in January. So that was our biggest year yet. And out of those, our number one focus is to try to do the BRRRR strategy. So if
Mhm.
we can renovate it and we can refinance and keep that property forever, that's our strategy. And if we're keeping it as a long-term or in co-living or in short-term, we're okay with either of those options if we can do that. There are some properties that just don't work for that, and then we do flip them. Especially if it's a property that when we turn around and renovate, we want to make it house hackable for the new
Mhm.
owner. Because if we
Mhm.
can kind of give them the knowledge and the opportunity, so the only flips we do are as if we can build a little casita or ADU or a separate in-law unit, so that we can say, hey, buy this property, you're going to earn income from it and reduce your income, and maybe kind of introduce someone to the world of
Oh,
investing
look at
through
that. Look
something
at
we do.
that. Yeah, you're helping create impact just by getting people into the game, whether they were thinking about getting into it or not.
Correct.
That's cool, man. I like that. Um, okay, 46 houses in 52 weeks. How did you do that?
So I think I cheated. So I started putting it out there. Literally, so here's a testament to putting it out there, and like the universe, right, just kind of comes back. You tell people what you want, and there's a lot of people that want to support you. So the first time I told people my goal, this is like maybe March-ish, maybe April of 2021 when I actually put it out there. And I said, I want to buy 52 properties. Literally that day, someone like sent me a Facebook message, say, hey, you'll never believe this, but I've got, I know someone that's selling 52 properties. Now, I didn't buy that portfolio. It wasn't a good deal, but those opportunities start to come, and I start to buy more properties in bulk in
Mhm.
portfolios, because most of my properties are spread out, in various markets. And I try to find rock star property managers that obviously manage properties for other landlords as well. I got into the habit of telling them, I want to be your number one client. I want to be
Mm.
your number one landlord. What do I need to do to get there? Even if I only have one property with them or two properties with them, I'm telling them that I am growth oriented, and I choose you for a reason. And you are one of the reasons my investments are successful. So if you can continue to do that, I'm going to buy around you. And at the same time, if you have any other landlords that are just tired, any other landlords that are just looking to exit for multiple reasons, send them my way and I'll see if I can buy them, because if they sell it to me, the property manager knows that I'm going to keep it with them. If that landlord sells it to anyone else, there's at least a 50-50 chance that they're going to lose that client and that portfolio to another property manager, someone moving in, something along those lines. So I started to specialize in buying portfolios as the entire portfolio. It comes up with
Mhm.
its own set of challenges.
Mhm.
Um, Many people, landlords, mom and pop landlords, that say they have 10 to 20 properties, maybe a mix of single family, duplex, triplex, quadplexes. They're paid off, and at some point they got one big portfolio loan cross collateralized over the entire portfolio, and which is great. It gives them some liquidity. They're leveraging their assets there. But when they're trying to sell, depending on the bank, they usually have limitations on selling off one at a time, or it's much more difficult. So they usually need to find a buyer that can buy the entire portfolio. And that's what we try to do. We buy that portfolio and then we refinance out on an individual basis, whatever we can. We sell off whatever's not a right fit for our portfolio at that point.
Got it. Got it. So interesting. Yeah, you're essentially hunting for your avatar is that smaller mom and pop that has a series of 10, 15, maybe 7 properties, and they're all paid for. Then they took the money out, one loan, which by the way, I'm in the process of doing that right now with my partner so that we can lend that money out. We've got a
Sure.
portfolio of 8 and you're making me second guess that. But no, we're just gonna use that money for private funds, right?
Sure.
But I could see where people essentially extract, right? Just like in
Sure.
commercial loans, right? Like commercial properties, they're going to pull the money out. Um, where are you typically hunting? Are you like North Carolina, Ohio, like Florida, all
Yeah.
over, or is that like
I'm
secrets?
I'm embarrassed of the number of states that I'm in, because in Hawaii, right? It's a different mindset. Like Hawaii, it's Hawaii and the mainland. Like there was no difference between California and Florida and New York. It was the mainland. And so I was like throwing pins in the map starting out my investing career, Georgia, Texas, and various markets. I've been more intentional since I've moved here, and specifically as of late, I've been trying to invest more in this area so that I can have something that's close enough to do some drive-bys and be somewhat involved in our project. So
Mm,
I love I love the Winchester area. I love Front
mhm.
Royal area. I love
Me too.
southern parts of Virginia, North Carolina. Absolutely. There's pockets in Maryland that can make sense. I'm just getting into West Virginia as well. So yeah, so really I'm trying to figure out what makes sense in about a 2 to 3 hour radius from me. Not
Mhm.
because, and I tell everyone this, not because it's the best place to invest. There's places way better than this area to invest. One, it makes sense because I have a really good team, really good agents and property managers that help me along the process, because I try to be as hands off as possible once the investment's in place. And then two, I wanted to have something that was close enough to be able to drive by and point to if I felt I needed to, get my kids involved for a lesson.
I love the Front Royal and Winchester area as well. We just bought, we have 26 acres under contract in Front
Love it.
Royal on the river. There's some challenges to the lot, so we'll see what we do.
Sure.
I don't know. I don't know yet. It's one of these where like I think there's something there. We'll figure it out. But okay, so you like you said, you're in a ton of states, right? And I would imagine, in over 20 years, I imagine, you know, unless you're cut from a completely different cloth, you probably bought some bad ones along the way. I would imagine, right? Just because
Yes.
you're
Sure.
not there, you don't know it, you don't know if it's a growth market. There's probably some home runs that you hit, and then there's some others that you're like, that was a mistake, right?
Yes.
Um, Talk to me about some of those that are challenging or were challenging, because I believe that we all learn through some of those stories, right? Like, what are the not to dos when you go out and you start looking at investing in other states, and what have
Yeah,
you learned?
that's a great question. I've made many mistakes, probably more mistakes than wins, and just luckily just keep going at it. When you're investing remotely, it's tough to understand, is it the market, is it the investment property itself, or is it your team? And because all three of those are tied. I have
Mhm.
had great properties in great markets that didn't perform to my expectations because I never found a rock star team. We're usually a property manager in place. And so I never grew around that property manager, eventually sold off or never expanded beyond that. And I have bought in, average markets, average investments that have performed amazingly because I had a great team, a great agent, and a great property manager. So more than anything, I think the ability to build a team, which is
Mm,
something I know that you're amazing at, building a team
mhm.
in various areas is the most important thing, because that team will guide you, because I don't know that market, right? I'm going to do the research, but I'm going to rely on my team to feed me the data, to be able to do that research, and making sure that they're committed, and more so just have the right expectations to meet my expectations, in terms of whether it's return, whether it's communication. And so that's it. It starts with an amazing team, and you find that amazing team from there. So speaking to failures that I've had, it really, a duplex in Georgia that, one, I just don't have any connection to that area. And yeah, I've been through 4 different property managers over an 8-year period, and it's subpar, throwing money into it, right? Renovating and fixing up as tenants move out, and the tenants move out, and it's just trashed. And I'm like, that doesn't happen on all my properties. Why is it happening? Do you only find terrible tenants, right? And right, and but it's me, because I hired that property manager, right? So there's something about me not being able to locate the right team in that particular area that has led to subpar performances. On more shorter term levels, I mean, trying to flip during the pandemic was tough, right?
Mm,
I try to do, and although I don't do a lot of flips, we do anywhere between 3 and 6 a year, depending on the market. We had one actually out of Winchester that was supposed to take, very simple, maybe 4 months, and it ended up being 18 months. And because of Winchester shut down, and no, there's like one guy that does the permits, and it took a month to get. So a lot of things happen, right? And things that we couldn't predict that were going to happen. And it's hard to make it be a profitable venture when you
mhm,
are planning on 4 months and you're going to 18 months. So
mhm, mhm.
those were some recent tough pills to swallow.
Tough pills. Have you ever shut a property down? Where you just, like, shut it down? I mean, I
Oh
shut
yeah,
one down. I shut one
yeah.
down. It was like, it's less
Meaning,
expensive it's less expensive not to rent it than to rent it.
yeah, mid project. So I bought a property last year out in Front Royal, and it is there's a lot of potential in it. A lot of potential. It's a mixed use property, potential for development, and I've done nothing with it for almost a year. And I'm debating on, do I just offload it, because, one, there's potential, but the bandwidth that it's going to take, and I just don't have the right team out there that can oversee it. So, one, we didn't start the renovation, but it's a useless property at the moment, not bringing in a cent of cash flow, and we're probably not breaking ground on it anytime soon. So we're probably close to shutting that one down.
Yeah. Yeah. Or selling it or putting it back out,
Yep,
or,
absolutely.
maybe, yeah. It's interesting because people don't realize that sometimes bandwidth is an issue, right? If you have a family, you're a broker, you're doing development projects, you got a big portfolio. There comes a point where you're just like, I can't keep my eye on that many balls effectively, and something has to either go, or you need additional leverage from somebody. So let's talk leverage actually. Like, how do you manage all this? I mean, is it a family affair? Is your wife involved in the business, or
Sure. Yeah,
yeah?
we have a company. It's called Newly Free Developers, and it sounds like a big company. It's not. It's me and my wife and my 3 kids, and we have some assistants, virtual assistants that kind of keep the back end running. But my wife is involved heavily on some of the deal finding, and some of the acquisitions, and then a lot of the design. I get up early. I love the Miracle Morning, and since I've been implementing the Miracle Morning, which is every day setting aside a focused time in the morning before you go off and leave and go to work. And I spend a lot of that time analyzing deals, and making offers and reviewing offers and things like that. So I'm still very hands-on the acquisition side of things, and that's why I love the the rental property side because we don't manage any of our properties. And so we get the
Mhm.
deals up and running, we see it through the renovation, and then we pass it on to a property manager that we trust at that point, and it becomes somewhat passive. Obviously, there's communication involved. There's still expectations to manage the managers, but it's much less involved than the actual acquisition and stabilizing process.
Okay, let's turn to financing really fast. That's another form of leverage, right? I mean, you bought a portfolio last year, you own a lot of property. Financing starts becoming sometimes more challenging for people. How have you kind of structured it, right?
Yeah,
I'll let you
and
go.
I don't think I can give anyone advice in finance because I think we do it the wrong way, would be my guess, and I've been working on better ways to do it. So we do a lot of cash purchases, and then we
Mhm.
refinance out of it. So we've been blessed to have equity appreciation in a lot of our properties. We save up a lot of our cash flow, and we do nothing but buy cash flow with our cash flow. And so we do cash purchases because that's the easiest thing to do on portfolios. And
Mhm.
then we figure out how soon can we refinance and get that equity back, or at least a portion of that equity back out. So that's been primarily our growth, and so that has snowballed our growth. If we're doing a one-off project that might be a short-term rental or a fix and flip, then we'll use specific portfolio type financing on that. But other than that, cash purchase and then a refinance back out.
Nothing wrong with that. That sounds like the right way to do it, right? You are self-funding at that point.
It works for our strategy.
Yeah. And so, did you then put equity lines against properties that you have, or did you just playing with the same ball of cash and you just keep turning it?
Yeah. So, like for example, the last portfolio we bought was 14 properties, mix of single family to upwards of 8 unit buildings. And the problem, one, I don't want to tie one loan across all of them. So we're doing individual loans to back out of the ones that we're keeping.
Mhm.
And so it takes time. There's a lot of paperwork involved, administrative stuff involved. So it's not an easy process. But that does give us the flexibility if we want to exit from one of those at a fairly simple pace. But yeah, we typically do 75% loan to value. Hopefully we're buying under value and we're able to get a little bit more than that depending on when we're refinancing. So almost like a burr without fully doing the renovation on it. And so we use that equity. We're not doing HELOCs. We typically, up until now, have been doing cash out refinances.
Got it.
We are dabbling into more of the HELOC option because of the craziness of what we're seeing in the interest rates.
Mhm. Mhm. Okay, here's a completely different question. I've always wondered myself, but now I get to ask you in front of everybody else. I mean, you're a prolific investor. Like you're actively investing all the time. Like, how did you become a broker? How did that how did that come about, right? Why are you a
Sure.
broker?
So I think most of what I do is based on frustration. So got my license because I was frustrated with my agent in Hawaii, right? And
Mhm.
not knowing that agents didn't invest in real estate. Most of them did not invest in real estate, at least back then. And so my questions were like foreign language to my initial. And so I got my license because I'm like, if I'm gonna have to look this up and educate my agent, I might as well become an agent, right? With
Mhm.
no intent of being an agent, but I love what the path that took me on because that's a separate business all of itself. Being an agent is an amazing business, but it's a self-employed business that you don't get the passive income. So I was doing both along the way, and then um, kind of working with my peers, but frustrated of like amazing successful agents not knowing what they're going to do about retirement, not
Yeah.
knowing like they make a lot of money and they spend a lot of money, right? And that's the cycle, whether you're an agent or a W-2 employee, that kind of happens, but more
Mhm.
so on the agent side because we don't have the forced savings aspect of a W-2 employee. And so I've been trying to like tell people about, my fellow agents along the way about one, how to increase their agent business, but most importantly, how to think about passive income at the same time. And eventually my broker at the time didn't know anything about investing. He's like, you should become a broker. You should teach people this. And I said I'd be okay and open to that, and just kind of went down the path and became a broker. It was never my goal to become
Mhm.
a broker, but I love coaching. That was kind of right when I hit my goal for my 30s was once again impact, and trying to figure out what's the impact that I can make, and if I can help 100 agents, and that's 100 families and maybe thousands of their clients along the way, I felt that I was making an impact that I felt I needed to do at that time.
Interesting. So similar to, so similar to the mission that I'm on as well.
Sure.
Like we
Absolutely.
created this thing called the 7 levels of agent wealth, and it takes somebody on a journey, right? It starts with mindset, then it goes to sales and marketing, and then you become what I call the awakened agent, which you start learning it. You have to convert your self-employed job into a business, an actual business with a P&L and separate bank
Love that.
accounts and all the rest. And then what happens is after that, it's a journey of investments because once you start learning this investment journey, and there's no straight line, but this is kind of how it played out in my mind and how it's worked with my people, my team. And then you go on a leadership journey, right? Because this leadership journey allows you to be able to uh, hire, develop, train, build teams, right? Like leadership is about building teams and influencing and being a servant leader and helping other people get what they want. And then it's scale. How do you actually start like creating multiple businesses? I heard you say that. So I'm gonna revisit this. This is why I'm bringing it up. I heard you say you had multiple businesses. And then we got to talk about the vending business for a hot minute too. Okay. And then once you're able to understand how to scale multiple businesses, and by the way, for those on the call, every little house you own is a little business in
Yes.
itself, right? And people need to understand that it's its own little business. And that was kind of like why my big wake up call. And and then it's impact, right? And of course you can create impact now, but impact is, for everybody it's a little different, but I always feel like it shows up in the form of giving somehow. Some people give with dollars, some people give with knowledge, right? And mentorship. And that's always been my thing, right? As you know, we've run the
Absolutely.
Great Investor Network for a long time, or my personal chapter for a long time, and now we're launching it. But it's this journey that we take agents on, and if they're successful in it, they actually move from this earned income, active income, to passive income, and I call that the income flip. Like you flip your income, right? So more money is coming in passively than actively, which
Sure.
sounds like that's the very thing that you created. I actually saw. So let's go back real fast. Um, Vending business. How did that? Like, I'm just curious, right? Because I'm just curious how that started. How old
So
were you?
yeah, man, I was probably 19, maybe 18, somewhere in that realm. I'm not a normal people person. I'm actually an introvert. I'm out in the public quite a bit, and I've learned to do that. But I've always like just really been an introvert. And I started to look at businesses, and that's businesses without people. Right. And so some of the best employees I've ever had were machines. So I have a coffee vending machine business.
Oh, you have
You
one
know,
now?
I still have ownership in it. I have no active
Okay.
role in it, but yes.
Okay.
So it grinds up the coffee beans, and they're little machines that go into office buildings and things like that make espressos and lattes and things like that. And then ATMs as well, which obviously not as relevant as of late, but those were surprisingly very, very easy run little businesses. You still
Mhm.
need some manpower to work and refuel and things like that. But it could be a passive business, and those were the two that I ventured that were machines, and I thought they were amazing employees.
Well, it's funny because when you look at a house, I always tell everybody, when you buy an investment property, it's a perfect little business, right? Like if you buy it right, it works for you 24 hours a day, 7 days a week. It doesn't talk back to you for the most part. It needs some love and care every now and then. You got to take care of it. You got to be, but for the most part, it does its job,
Sure,
which is
absolutely.
like different than, on the agent side
Yeah,
where,
and
do you know where I'm going with that?
absolutely. I love your comment about the houses are these businesses. It reminds me of when I took over as a broker for my first office out in Broadlands. I must have been 30-ish or so. I'm probably the youngest person in the room, and I'm introducing myself to the group, and I go on this story about not talking about real estate, talking about my businesses, and I ended it with like, if there's one thing to sum up me, I kind of like real estate is what I said. And they're like, what are you talking about? I kind of like real estate, but I love business. And it turns out real estate is an amazing business. Whether it's owning
Mhm.
real estate, whether it's being a real estate agent, it happens to be one of the most amazing businesses you can get involved in. And that's really what sums me up there. I love the business aspect of real estate on all levels.
100%. So I love the reason why we got into vending just for a hot minute was because I kept paying the toll here on the toll road. And one day I came home and I said, "Babe, I want to have our own toll." Like, and our daughter had just been born. I'm like, I had this idea. What if we just like bought a little vending machine and you could put it into a place like she wasn't actively we don't have what we have now, right? We weren't building cars at the time. And I was like, but we could put in a couple vending machines and then that money could then be invested and it could go towards Isabella's college, right? And that was the inception. And my wife is one of these like go-getters. And I gave her like this basic goal. I was like, if you could get like 10 little machines in a, within the year, that would be amazing. And she like landed 10 accounts in like 30 days.
Wow.
And the next thing I know, of course, she took it way bigger than what it should have been. Fast forward a couple years, she's doing well, but a vending machine, like she had big machines, like she'd have like the screaming child, at like Boo's Allen Hamilton. She's like changing the chips and the cokes, and like one day she just called me and she's like, "God, that's it. I'm done. I don't want to
Right.
do this," right? And I was like, "Okay, okay, we don't have to do it," right? But that was, that's us flexing muscles as business
Sure.
people, right? And but the concept was kind of like the houses. Like, how do I do one thing, for the most part, and get this recurring revenue that comes in? Okay, so you're a broker, right? You're a broker for a pretty good size office, and every day you're coaching and you're consulting agents on how to build bigger lives. And I noticed that you started this cash flow breakfast club. Like, what is that? Is that a podcast? Is that like an actual breakfast club? Did they have breakfast? Like,
Yeah,
why haven't I
exactly.
been invited? Like, this sounds awesome.
You are officially invited. So it's a book. It's a book that we came out with. We wrote it. I wrote it about 3 years ago, and really once again, once I hit 40, I was kind of like the change in mindset. This is what can I do to create legacy is really my focus for the 40s. So we published the book, and it's really mostly my story starting up as an agent investor in Hawaii. We created a fictional parable around it, but basically everything that I do coaching wise to my agents and their clients, I put it in there. Like, how do you become financially free? How did I do this by this age? Not to say it's the only path, but it's a very plain, simple, boring path about stop spending all your money, save your money, invest in real estate, save that money, invest in more real estate, and follow some core principles there. So it's a book idea that I've had for a while prior to me publishing the book, because I thought there's a moment that I was never going to publish it.
Mm,
I was just too worried about kind of putting something out in the world like that. But I use it as my manual, my training manual. And
mm.
so I started to coach my agents, and we called it the Cash Flow Breakfast Club. And eventually they started to say, well, can we bring our friends? Can we bring our clients? And then it turned into a large group meetup. We regularly get somewhere in the realm of 100 to 150, on a monthly basis or whenever we run it, with the focus of education, networking, very similar to the grid network that you put together on a big scale there. But it involves in the education that I think, one, we're in a time where it's so easy to get information, right? There's amazing podcasts, there's amazing information and YouTube videos out there to give all the information away. But sometimes you just need to connect with someone, and you need that coach, you need that mentor, you need an advocate to kind of pull you along, just to like, can I just run this by you? And so I wanted to, one, not just me being that, but create as many agents and investors in our community that were comfortable doing that, so that they can go be the advocates for their friends and family to hopefully radiate out beyond just what we're doing.
Yeah, I love that. I absolutely love that. And I'm gonna go download the book. Where can I get it? Where can I buy it? Right.
Amazon.com. I appreciate it. I'll send you a signed copy after this if you want. But yeah, it's a fun story. I'm not an author by any means, but it was a challenging process that we went through, and I'm halfway through my second book. So hopefully that'll come out in the next year or so.
Are you allowed to do you know the name? Do you have a name yet or no?
I don't have a name for it. I have a few working
Okay.
titles, but the Cash Flow Breakfast Club was nowhere near the original name, and so I'm hesitant to even do that. But it's going to follow the same storyline down the road because I'm a firm believer in cash flow for passive income for
Yeah.
obvious reasons. That's not to say it's the only thing that you can do, but it's a route that I went. But I'm also a firm believer in shifting your strategy at some point. And once you're financially free, then that's when you shift your strategy. So we get so like in this world, there's so many things that can distract us, so many amazing different opportunities for investments or business focuses. And I've been guilty of being distracted, a
Yeah.
lot. And so really the ability to hunker down, hit financial freedom, baseline financial freedom through passive income first, and then you are an accredited investor. Then you go into the big developments. Then you take bigger risks, bigger rewards. That's how
Mhm.
you're building your legacy. But too many people try to build their legacy before they're financially free, and that's the
Mm.
riskier, options out there. So the next book is on the bigger things. This is baseline financial freedom. The next book is building legacy, leaving a mark, and building something you can hopefully see from the stars at some point.
You know, it's interesting. I heard something this weekend. I was at a mastermind with um, some really smart people, and they said, I'm going to butcher it, but essentially, it's when you're trying to go for a home run, it's because you're trying to catch up. You feel like you're playing from behind, you're trying to catch up, and so you make these foolish mistakes. And you got to realize that there's no like catching up. There's just this fundamental day in day out, one brick on top of another brick. Don't judge other people by what you have, what they have, and what you don't have. This is your journey. Don't worry about anybody else's journey, right? And just focus on kind of like that unlocking that level one that you talk about. Like in my mind, I'm curious to see whether you kind of feel this, but like that first level, that when you flip the income, when you have more passive income than expenses, um, that is, I mean, like Robert Kiyosaki talks about this. He says you exit the rat race at that point, right? You kind of
Yeah.
have options. Um, but it's kind of this foundational piece that has to happen. Nobody can take it away from it. And I see so many people put that at risk sometimes
Yeah.
because they want to hit the home run. So then they lever up this thing that they created. And I was like, it's got to be so strong that nobody could ever knock it down, right? Um, you kind of feel the same way, or like,
100%. And the problem is you can hit home runs, right? There with technology, with so many things out there, various investing platforms outside of real estate. There have been so many home runs that have been hit, and we've been in this upward swing of an economy for so long, which obviously is shifting. Um, so you hear enough of those stories on Instagram, on TikTok, on Facebook, and you're like, that's
mm,
the way to go. Because
mhm.
my path is boring. Like the path that I took is boring as heck, right? And I encourage people to take this boring path because at some point I'd love for you to risk it all. I would love for you to risk it all except for what's financially free, because you risking
Mhm.
big means a big reward at some point, but it doesn't affect your family's financial freedom.
Oh man,
And
I
that's it.
totally, I totally agree. I'm like, at that point, it doesn't matter, right? Like now you're just playing the game to play the game because you've got this like this base, but it takes people having to be okay with what they have. Do you know what I'm saying? Like there's
Yes.
always this want sometimes for more. So the needle keeps getting moved, right? That goalpost keeps getting moved because they're like, well, now I make this much money, so I deserve this kind of lifestyle, right? Sometimes you just got to be like, this is the baseline, right?
Yeah.
I haven't named that baseline just yet, but it's that's kind of
Yeah.
in my mind it how it is.
I,
And
I
anything
think
above that, then it's like you can do whatever you want to do, risk what you want to risk. It's just play money after that.
Exactly. Yeah. Baseline financial freedom. And you talked, there's a chapter in my book, like keeping up with the Joneses, right? We all suffer from that. And if you can
Yeah.
trick yourself or put systems around yourself, because if you're making 3 times the money, it's almost foolish not to increase your expenses, your housing, your car, and things like that. But it's by doing that, increasing your expenses to your earnings level is really what removes your ability to invest at a high level.
Yeah.
And so if you can just say, hey, I'm just going to trick myself, I'm not earning any more money, and I'm just going to
Mhm.
maintain this lifestyle for as long as it makes sense, and I'm just going to throw everything into investing after that, that's how you fast forward.
Well, I believe that if it hadn't been for houses, I definitely am the kind of guy, just my personality. If it's in my bank account, I'll spend it. So I just figured I'd buy another house, and it became like a forced savings account
I
for
love
me.
it. So true.
Okay, let's shift real fast because you used the word shifting market, and we're in a shifting market, right? We're at the ground level. We could feel it. We know it, right? Contracts are starting to fall through a little bit. We're starting to sense that price drops are starting to occur. Um, what do you do, right? At this point, what's Omni thinking about? What's he thinking at this point? What's the chess? What are the chess moves that he's playing in his head? I'm
I
just
love that.
curious.
So there, I mean, I wear multiple hats, right? So I care, I'm a broker and I care about a lot of my agents, and this is their livelihood. And so a big focus is from an agent standpoint, how do you succeed in this market? And it is shifting your team, shifting your focus, shifting your message so that it's relevant, figuring out what people are worried about, right? If you're worried about it, chances are other people are worried about it as well, and figuring out what they're worried about and crafting your message, offering, or service very tailored to that. And so that's one focus that we coach and train on all and talk about all the time in our masterminds. Me personally, as an investor, continue to buy. You know, I am shifting my financing a little bit. Where before I was like dead on. It was like one of the 10 commandments. I'm 30-year locked in. You know, lock in that rate and never touch it again. Where I don't think I want to lock in a 7% interest rate on a 30-year fixed mortgage, or my strategy has to be involved in refinancing down the road. It still needs a cash flow for me. My minimum return requirements have dropped since the rates have come up. But if it is a cash flow property, then you still need to have that positive cash flow, regardless. Where too many people got into a negative cash flow situation the last time the market crashed because they were looking at the appreciation aspect of it, and there's just too much risk there. So I still think there's room for us to make modifications as long as we have the reserves to be able to support shifts there. But the core principles are still the same. Buy properties that make sense to buy. Just got a property under contract in Sterling yesterday. And so we're going to, it doesn't cash flow well according to our standards, but it's in a market that we can do, actually short-term rental, and so we're working on that, and we're going to try and optimize the cash flow in different ways.
Got it. Love that. You mentioned rate of return. I'm curious, what's been the buy box over the last few years? What's been your buy box? Like, what do you look for? You're like, okay, it checks all the box. We're going to buy it.
Sure. Right. So within the portfolio, the individual properties needs to come close to what is called the 1% rule, which a lot of people have variations on that, right? Whether it's a 1.5% rule, 2% rule. But the 1% rule works for us because at the rates of 4 and 4.5% that we were doing for many years, that turns out to paying a property manager, putting out reserves, and getting a good amount of vacancy reserves and repair reserves, and still having just a straight cash on cash return of somewhere between 10 and 15%. So that's what I've been used to. So targeting the 1% rule, unless we're doing a BRRRR strategy, then the BRRRR strategy is about the equity that you're pulling back out and being positive cash flow after that. So depends on if it's a straight cash flow, meaning the tenants are in there and we're not refinancing, or if it's going to be a rehab BRRRR, then we factor in, is there enough upside equity, forced equity appreciation where we can get all of our capital back and still be positive cash flow.
Okay. And those that are listening to this in other markets, right? That 1% rule in our Northern Virginia market hasn't been possible in a long time, or very
tough.
difficult. So that's why you were going to some of these other markets, right? You could
Correct.
find them. Sometimes when you go to those other markets, though, and they're operating at the 1% rule, you got to worry about growth within those markets. Some of them are not in growth markets. So you kind of
Yep.
identify which are the growth markets, which kind of fit my avatar. And do you do mainly single families in towns, or are you also doing apartments? Or
the vast majority of what I do, I don't. The only single families we have are short term or fix and flip properties. The majority of our buy and holds are at least 2 units or more. So 2 to 4 units is our absolute target, and then we have a few mid-sized apartments.
Got it. Okay. Any quick little advice on buying multis, right? So those that are getting in to buy their first duplex or 4-unit or 5-unit, right? Anything over 4 units is actually considered commercial at that point, different type of loan. But I'm just curious what you've learned along the way in terms of what the operating costs are for multis versus singles, right? I think that could be a good little topic right there. Not a lot of
Yeah.
people understand that.
Yeah, so the capital expenditures and your reserves are different if it's single family, because on a duplex, for example, there's probably some common utilities that the landlord has to inherit, like the water, sewer, trash is very common in many markets for the landlord to pay. Where if it's a single family home, the tenant's paying all the utilities, but now you have two tenants sharing one bill. And it's not fair to just split it, because one tenant may be, one person in there, and the other side may have three people in there, so it's not equal usage. So if you're not sub-metering them or separating them out, you got to factor in more costs per unit on that side. Once you go above the 4 unit and you get into 5 units, even if it looks like a regular small multifamily, your insurance costs skyrockets quite a bit. Once you get into that commercial realm as well. But financing is pretty much the same, in terms of if you're still using one of your first 10 loans, you can get some really good financing. You can get owner occupied financing, right? If you want a house hack and live in one as well. The best book I ever read on that, it's a fairly recent book, Brandon Turner, previously Bigger Pockets. He came out with a 2-volume series, The Multifamily Millionaire. The first version is buying that 1 to 4 type level, and then the second version is buying the big apartment buildings. So anyone looking at the multifamily side, there's some really actionable content in that book that I still turn back to this day and look at.
That's awesome. I think I saw a picture of you guys in Las Vegas or something like that hanging out. That's kind of cool.
Yeah. So he's a cool guy. He's from Hawaii. I consider him a mentor, a coach of mine, and lucky to be a part of a mastermind that he runs on a regular basis.
Very cool. That's awesome. Omni, what question haven't I asked you that you think our grid community should be thinking about or know, right? We're a mix of real estate investors, agents, entrepreneurs, business owners that want to create passive income, and everybody's at a different stage on this journey. Some people are just starting, some people are absolutely crushing it, right? Um, what what advice would you give us?
Yeah, I don't know if it's a question, but something that I've been thinking about a lot is we alluded to this multiple times, throughout the show. But I've at an early age, for whatever reason, and it's going to sound weird, like for some reason, I thought I was going to die at 30. Well, this is like when I was 20, right? And no logical reason why, right? I've got my own issues, and so I'm like, I need to retire by 30. I need to have it set, and so that was my driving motivation, and I clearly didn't die. And then I'm like, well, maybe I'm going to die by 40, right? So I don't know if I've ever told anyone this. So I've got these weird things going on, but I create these impending deadlines in my head that just happen to be decade, and it forces me to achieve at a higher level than I probably would have there. I'm not saying that's healthy by any means, but if I had to do it over again, I would create shorter impending deadlines. I mean, like, man, every 5 years I got to reinvent myself. I need to fire myself, retire, start all over, do something different within these deadlines. Without those deadlines, we kind of just live, and there's no end to what we're doing. And sometimes you get to a very successful high level and not realize that you don't need to be there anymore. You might be able to step back. It might be successful without you there, and you might be able to start your next venture, your next impact, your next focus. And so I think putting deadlines on yourself, that's why within the book I talk about financial freedom in 5 years or less. Not to say that's the magic number, but if you just say, I'm going to try to achieve this through rental property purchases in 5 years, that gives yourself a deadline. And then once you do that, then now what's next, right? Maybe it's a bigger investment, maybe it's a legacy after that. So figuring out what's the right deadline time frame for you.
Man, I love that. Love that. Have you ever heard of the concept of Parkinson's law?
No.
Okay, so have you ever read the book Profit First?
Yes, absolutely.
Okay, so in that book he talks about Parkinson's law, right? And Parkinson's law, when it comes to money, right? Let's just say you have $100,000 in an account. Well, if you're not careful, right, you will spend up to that $100,000 because you just feel like you've got that money and you've got those reserves and it's there. And so what he talks about is siphoning that money out. And you alluded to this earlier, so that you feel poor, right, the whole time. You can't even see that money. So maybe you keep $10,000 in that account and you make it work on 10,000. You make it, you force it.
Yeah.
Well, it works like that for time as well, right? When you force your time, like, and everybody knows this, right? Think back of like college days for those of us that went to college, right?
Sure.
It's like, hey, you had a deadline, and most everybody waited to like 24 to 48 hours before that deadline, yet you had weeks to get it done.
Sure.
But then somehow you pull the all-nighter, you get it done, you caffeinate yourself, and then you sometimes you just do your best work under pressure like that. So it's like you're creating these windows of pressure, right? You could do it with money and you could do it with time, right? So that's very cool. It actually has given me a couple things to think about. I've often said that if agents are not careful, because you and I are passionate about this tribe, right? If agents are not careful, uh, they get stuck on this transaction treadmill. It's like, you drive the same way to work every single day and you just end up at, like, you don't even realize it because you're like hypnotized. Well, I think it happens like that with transactions, with agents. They just wake up every single day doing the thing that they did before, and nobody's disrupted the pattern and said, hey, wait a second. Do you understand what game you're actually playing? Because I don't think you know the game, right? I don't think you haven't been introduced to it yet. And I know I was guilty of that myself. Like my first 10 years after I read the book Rich Dad Poor Dad in my early mid 20s, right? I'd say like 24, 25. I went on this like, I bought like a lot from 24 to 34, right? And then from like 34 to 44, I really started focusing more on building the team and building teams. And I didn't buy as much as I had done the previous 10 years. And when I look back, I'm like, man, majority of all my net worth is from the stuff that I bought between the age of 24 and 34. Now I've built a really cool business and businesses, and I've learned business, and I've learned to convert those from a self-employed job into a business. But that journey was hard,
Sure.
right? Like that's a
Yeah.
leadership journey. That's a people journey. That journey is the journey was hard. And now I'm kind of in the, okay, well, for the next 10, 15, 20 years, I, I'm I'm entering in with my eyes open again. I'm just going to
Sure.
buy more. Like I now understand. I can do both of these things simultaneously. But I put
Love
my
it.
blinders on. I was like, okay, I'm going to go deep here, and I'm going to go deep here. So Amnai, thank you so much for sharing time with me today, man. I appreciate it.
Pleasure, Rob.
You and I could probably chat for hours regarding pouring into the agent. And I refer to them once they understand, the game, just the agent investor, right? They
Yep.
can have the heart of an agent, but the mind of an investor, and they can go out and serve that way, and they can serve their families
Absolutely.
simultaneously. So thank you, man. I appreciate it.
Welcome. Thank you for having me on. I'm once again huge fan of what you do, and love, as you know, I've showed up to your events as well. So thank you for what you do for our community as well, and appreciate to be a part of it today.
Man, I'm looking forward to coming to yours. That looks a lot of fun.
Definitely.
You even have like the
I'll let you
whole
know.
boardwalk, and you guys like what is it? Omniopoly, right? I saw that. I was like, okay,
We
that's
like
very
games,
cool.
yes.
Awesome, man. Well, you take care.
I
Talk to
appreciate
you
it,
soon.
Rob. Thank you.